Good evening, dear traders. How are you today? Hope you've had quite successful days of trading all along the week. Yeah, right now we are in the middle of the week, and as always, it's me here, Matthew and Sam. Hey, Sam.
Hi, Mathew. Good evening, guys. Hope you're having a fantastic week. There's a lot of news happening. So yeah, we're hoping everyone is taking advantage of all the opportunities.
Exactly, and as that one happens as well, we want to bring you a little bit more of information on how you can look at the charts, how you can analyze. And today, me and Sam are going to look at how you can use triangles and channels in doing technical analysis, and the trades the setups you can look up in the charts to help you make out something out of it. But even more importantly, remember, you have to understand the charts first for you to be able to make some money out of it. All right. And right on, we'll start with the triangles. So Sam will be taking us through the triangles. Sam, you want to tell us more about the triangles?
I'll start it off from here. Yeah. So
okay, right.
Okay. So there are two things there are a few things you need to know when it comes to trying and reading the charts. Remember, you always have to know it's a battle between the bulls and the bears, always. So when you're trying to read the chart, you're sort of trying to get a feel of where the bulls are and where the bears are. And even with the triangles themselves and the other chart patterns that we'll cover, it's more or less trying to just read the footprint that price has left. And that is going to tell you where the highest probability is that price is going to go to. Because at the end of the day, you're trying to look for high probability setups, as they call them. So when it comes to ascending triangles, even when you view them, guys usually tend to cram these patterns. But the most important thing is if you can really understand what they're about, what it's actually telling you, then you're in a better position to identify them and spot them on the chart, because they're not going to be picture perfect or copy. It's called textbook examples, because the markets are different. The markets are different, they keep evolving. So the best thing to do is to understand what exactly about bulls and bears are these patterns telling you. So when it comes to an ascending triangle, this is a bullish chart pattern in which we have a series of higher lows and an upper resistance level. So you'll have a scenario where when there's a horizontal resistance that runs at the peak, yeah, as shown by Mathew. So you'll have a situation where the first push will be by bulls, yeah, and then you'll have a push back by bears, but they'll tend to push it at a lower price where bulls will come back in, yeah. So in essence, it's telling you that buyers are willing to accept higher prices along this pattern. So if buyers are willing to accept higher prices and bears can't push the prices lower, then you'll have an ascending triangle in this case. So at the back of your mind, you're always trying to read, what are the bulls doing? How strong are they? How are the bears? How strong are they? So in this case, you usually have a breakout at the resistance if the pattern plays as expected, yeah? And then the next pattern is, you have something to comment on this, Mathew?
Well, we can look at the next one, but even on this one, you see you're looking at the support. You just want to get these structures based on the minor support and resistance levels. You're just joining them and they automatically show you whether you have a triangle, and that's what gives this type of a setup. Yeah,
exactly.
Yeah.
So then we can go to the inverse, the opposite. So in this case, for a descending triangle, maybe you can just show the image of the example of a descending triangle. Yeah.
Yeah, sure.
So in this case, you'll have bears attempting to push the price lower, and then bulls failing to take the price up. So you have a situation where every consecutive push that the bulls attempt is lower, has a high that is lower than the previous high. Yeah. This shows you that the bulls are weakening in strength. Yeah. It also shows you that the sellers are willing to accept lower prices as time progresses. Yeah. Hence, we have this descending triangle shape over here. So this gives you a bearish signal as to what the market is anticipating to do. Yeah.
That's awesome.
Yeah, exactly.
But
So
then
now we have.
get ahead. Go ahead. I'll come with my question. I want us to. I have a bone of contention to chew with you on this on these triangles.
So for the descending triangle, you have your support line. Yeah. So the market is the bulls are going to attempt to push price back up from the support line, while the bears prevent the bulls from pushing the prices higher every consecutive push. Yeah. So you have your trend, your down trend line, and your support, and that's what makes the descending triangle. Yes.
Okay, nice one. Then this is the discussion I want us to have. You see, of course, looking at this setup here, like there is more, like the bullish power is reducing more and more, right?
Exactly.
In this case,
exactly.
And looking at the previous setup here, the bearish momentum is reducing little by little. Okay,
exactly.
The bulls are having more power. So, but there's this tendency of traders want to see as if it's going to be an automatic break to the upside. And what do you think? Because sometimes you might have even the bears getting strength and even having more momentum at this setup. Even as you have it getting decimated, and the same case can happen here, where you might have bulls getting power at this point. So to me, I think, and I would want to get your comment on this. Should it be like this is going to be automatically a break to the downside, or we should first of all wait and see the price action move?
It's always a confirmation, Matthew. For example, in this down push, you'll find that there are around 1, 2, 3, 4 bearish candles. Yeah. And then the consecutive up push, you have 4 bullish candles. But then you can see with the 4 bearish candles, they've moved a larger distance than the 4 bullish candles. That tells you the bears are really overpowering the buyers. Yeah. So when it comes to the break, okay, so for every consecutive bullish push, you'll find that there are more candles. It takes more candles to move that small distance than it takes for bears to push the price back up. So you're trying to read the chart as to how the bulls are moving this price, how long they're taking, and how the bears are doing it. So when it comes to this, you'd have to wait for a breakout. You have to always have a confirmation before you enter this trade. And even when you enter the trade, you still have to watch your risk management, because it's never too sure until you've taken your profits from the market. So you always have to wait for confirmations.
That's exactly what I was looking for. So that you see, at the beginning you mentioned that traders should not cram these things. It just should come out automatically, and then even the direction of the price that is going to take, the side of the breakout, because at the end of it all, you're looking at the breakout, to which direction. Just a matter of trying to find what's happening with the momentum in the market and the buying and selling activity. So the direction of the break is more important than the theoretical view that we've been having all along. Yeah, you agree with me on that?
Yeah, exactly. Because the breakout is going to indicate, okay, who has won this battle after the pattern. Yeah. So if it's a break to the downside, then you know the bears are now fully in control. Yeah. And even then, you still have to be cautious and watch where you set your stop loss, how you treat your stop loss as the trade progresses, and all that risk management practices. So it's never over until it's over with the trade, once you decide to get into a trade.
Yeah, and I know it will get even more interesting when you will be showing us those setups in the charts, right?
Yeah.
Okay, and now let me take us to the to a setup called bull flag, but this one is based on channels. But you see, obvious these setups, they are given a name, and a bull flag is just a bullish chart pattern which is formed by, we have rallies separated by a brief sideways consolidations. Okay, you have a rally, that's a movement to the upside. Then there is a little bit of exhaustion of the market. Then you have some form of consolidation before the price picks up the upward momentum again. And of course, a flagpole like would want to call it. It's just where you're seeing the price has been rising quite fast. So you assume it to be a flagpole because then you're having a channel. Okay, it will be more clear when you look at it on the chart. So what happens is that traders should be prepared to trade once price breaks the upper level of the range, because you having a range, something like this. Of course, we're talking about the pole, like the first rally up acts like a pole, because then you have the flag like you can see there, right? And then once the price breaks up to the upside, then of course that's what we are looking out for. Okay, but of course we will see even in the charts we have exceptions, because we are always waiting for the side of the break. Okay.
Yeah, just have a question on this one.
Mm-hmm.
What constitutes of a break? Do you look at the wicks or the closing price? Once a candle is okay, it's broken, but what would you consider a break once it moves out of this range?
Okay, we might want to look at it in different ways. Of course, once the price moves out of the resistance level, that is a break. But then you might want to wait, might be a false break. You might want to wait for a confirmation. Then that's why you might speak about a retest. Okay.
Yeah.
So I hope that one clarifies, because sometimes breakouts can be very tricky. You might find a breakout, so it becomes a fake breakout, and then all of a sudden price pulls back again to the channel, right? And then you realize that the setup doesn't come up properly. So for me, I think a breakout, to me, a complete breakout is where I have a confirmation, or at least quite a significant move that you might conclude with a higher probability that, well, this might be a good setup to get in. Okay. Yeah, awesome. So this is, like I said, this is just a bull flag. Okay, so we are looking for a rally up, a small consolidation as the price gets exhausted a little bit to collect some more maybe liquidity and upward move. Then you have a break to the upside and act like a flag, right? Then the opposite of this one is where you have a bear flag. There's a strong drop in the price or bearish move. Then after some time, you realize there's a little bit of a pause in the market. Then here is where there is a bone of contention between the buyers and sellers, or a little bit of a pause, and then a break to the downside for the continuation of the downtrend. So this one again appears to be a bear flag. You have something to add on this one, Sam?
It's just on the where exactly or how exactly do you plot the bear flag and the bull flag? What do you use? Do you use the closing prices or do you use the wicks themselves? And how do you go about it?
I think on this one you want to look at like in this case, when this chart was captured, this was on a high time frame, and you see you don't have like quite a clear pattern where you have the price like having a significant move to the upside to reach a resistance level, and maybe to the downside to get to a support level. I think we'll be able to look at a distinct or a very clear channel which is appearing in a downtrend, and then the continuation once you look at the examples. But to answer your question, whether it's on the wicks or on the body or the close, I think it's more on that level. Okay, it's like a level. You don't want to say like it has to be specific wicks. Just like the way someone would draw support and resistance, but now you realize that the support levels and resistance levels, they're appearing like they are shifting to the upside more, okay, than to the downside, right? Yeah. So if I don't know whether I have something to draw here where I can use to demonstrate, and yes, I got a small tool here. And I would say it's where you have the price moving all the way up. I don't know. Yeah, moving all the way up, gets resistance, moves down again, up, down, and then at some point, boom. So it's if it's on if you go on a lower time frame where you have quite some good moves, like this up and downward move should be looking like a complete wave, a full wave. All right. So it's more of the level, because whether I had a pin bar here or a very long wick, then of course still won't matter because you depending on what you're looking for to enter the trade, but still you want to look at the level. Okay.
Yeah. So these ones are more advisable to plot on a higher time frame, and then.
Well, yeah, even on a higher time. You see, now the thing is, if you can get such setups on a higher time frame, some out of experience, of course, if it pans out, if it comes out like it's a break of that channel, then of course it's something you're going to ride for several days. Because imagine if this one was a 4-hour time frame, okay, and then you just find it right at the beginning. You can see all these bearish candles, and that could have been a strong downward move that a trader could bag in something. Yeah. Okay. All right then. So I think with that we can move to examples, but not before mentioning our Twitter, our social media channels that we have. I don't know where my cursor has gone. Okay, yeah, you can engage us on on Facebook, on Twitter, on LinkedIn, right, Instagram, okay, and even here on YouTube as we share these sessions. Give us your questions; we'll be happy to answer you, right? Yeah. So Sam, you ready to take us to the examples of the triangle,
let me share
right?
my screen. Exactly. Yeah. Let me share my screen.
Okay.
And then
all right, then you are able to go ahead and show us. All right.
Can you view my screen?
It seems you don't like using the normal red.
Yeah, I like the blue and black.
Okay, no worries.
Yeah. So let's start this. We have this pair, pound Australian dollar, and in this case we see the pattern forming over here. So what I'd want you to note is how the bears in this case are behaving. So you have wicks and a bear. Okay, so the move is barely getting to the other low point, yeah, in this case. So the lows are going higher and higher, and then finally we have that push from the candle, yeah.
It's very evident there how we have successive higher lows.
Exactly. Yeah. So these pushes, these attempts by bears to push the price down, they fail, and every consecutive push, you have a scenario where it's a higher low in this case, yeah. Yeah, so it's like this downtrend is failing to materialize or continue going to the lower side. Yeah,
the bears are losing the momentum successfully. Okay.
Exactly, and then we have this really strong push. Yeah,
nice one.
The size of this candle is almost the size of the entire triangle that we had started with. Let me draw this like that. It's almost the size of the candle that we had started with. So this is a really strong confirmation that bulls have come into the market.
And by the way, that's what. That's awesome. I want to chime in here. You see, at the point where you wanted me to make clear how the breakout happens. See, that one is a breakout, and like when I was saying you might want to see a confirmation or like something like a retest. But now looking at that case there, you realize you can as well consider how strong the breakout move was. Like in that case, someone who was waiting for a retest might have lost some.
Exactly. So sometimes the market can retest, but we all know waiting for retest sometimes can be a bit tricky.
They won't come. In this case, they won't come.
Exactly. So depending on how strong the breakout is, a trader can decide to just enter, or if you're very conservative, then you will have missed this trade if you're waiting for a retest. Yeah. So it depends on your trading style and how really you want to go about it. Yeah. Exactly.
This one always gets us to the conversation of whether being an aggressive trader or a conservative trader, which one is better. And now you see there are times when an aggressive trader will get advantages, like in that scenario.
Exactly, exactly. But then we have a scenario where we have a push, that one. And then we have bears coming into the market. So we had this down push up to this point. And then now we get the inverse, yeah? Bulls fail to push the market higher, yeah? So they're already failing to go higher than they initially had tried, yeah? And then finally, we got the market melted down nicely like that, yeah? So in this case, you can see your neckline is very clear. It's even starting from this previous high. Yeah, and then we have our pattern forming like that.
That's awesome. Another triangle. So I think it's all about training on our eyes to see it. Okay.
Yeah, to spot it. So in this case, the break was really weak. Yeah. Unlike this one. In this case, the break was very weak. So in this case, we can just wait for a retest, because you have to be sure that indeed sellers are in control. So we had that push, breaking the neckline, and then a retest.
Wow. Yeah, that's what I was talking about. So maybe, I don't know, does it appear that when you have the weakness in the market, when the break is weak, most probably we might, that's when you're likely to wait for a retest.
Chances are, yeah. If the breakout is weak, then you're better off waiting for a retest, because you can never be too sure with these things, yeah? So for example, in this case, what confirms sellers are in control is this strong bearish candle over here. Yeah. So now you can say, indeed, sellers are in control. You can sell this market. Yeah. And still with that, you still have to have your risk management into play, because you really never, it's a game of probabilities at the end of the day. So you have to get your risk management intact, even when you're sure of how the pattern is going to play out.
As always, it's about the level of confidence that you have, depending on the confirmations you get in the market.
Exactly.
Okay.
Yeah. So we go to another example. This one was also a very interesting one. You needed to have patience in spotting this one, and even when it was forming. Yeah. So in this case, we had a push to the upside, a really strong push, and then now sellers started coming in slowly. So we started seeing some selling activity. The market going lower. Let me push this. And then with every consecutive attempt from the buyers to push the market higher, it ended up being lower than the previous high. Yeah. So in this case, you can tell buyers are weakening, because every time they attempted to push the price, it wasn't going as high as it had initially gone to. Yeah. And then I think you're right with that. If it's a weak break, you have to wait for a retest, because even in this case, we had a breakout. Let me plot the breakout just a minute. We had our breakout like that, and then we had a retest. A retest.
And some form of consolidation around there.
Exactly. But what you can see is price is being rejected with these wicks over here. Yeah. So as long as price was staying below the neckline, then you're good to go.
Okay, another concept comes in there where you have the support turning into a resistance. Yeah.
Exactly. So in this case, you have your support, which was previously a zone of support, now turning into resistance, and then the classic break and retest.
And from there, a very strong downward move.
Exactly. One more example.
Awesome. Yeah.
Yeah, I think your point is making sense. If you have a weak breakout,
you noted that, right?
Yeah, we are bound to have a retest before we go lower. Yeah. So in this case, the same thing. Sellers tried to push the price down. Buyers attempted to push it higher, but they were failing to break new highs. So at the end, we had sellers, although the first breakout was weak, the consecutive retest, we had a strong bearish candle indicating it was actually a seller's market.
And there it went tumbling.
Exactly. Yeah. And then this Singapore dollar, this one was also really nice. We had a push down, and then buyers attempted to bring it back up. Sellers failed to take it lower. And then you had this push and pull before a breakout, a retest, and then the market took off.
Yeah, and for all these ones, especially on these time frames, I think patience is of importance. Okay.
Exactly. Yeah.
Sometimes what happens is that you for traders, you find a breakout and then you like this one might not get back to retest. But again, the question of, I don't know why I find myself repeating this. Should you be a conservative trader or an aggressive trader? It's a matter of choice. What do you think? By the way?
I think it depends on your, number one, your risk appetite.
Mm-hmm.
Okay, number two, for risk appetite, it's how much you're willing to stomach in terms of losses. Yeah.
Yeah.
Because you always have to have that at the back of your mind. Because the more aggressive you are, then the more risk tolerant you should be. Then the other thing is your trading objectives. So the guys who have trading objectives, maybe 10% a month, 20% a month. Yeah. So if you have an aggressive target, then you need to have aggressive trading behavior so that you're able to reach your targets. So it's always a trade-off. If you want more returns, you need to play to play harder in the markets.
It's just a matter of understanding, like you said, your objectives and how the style that you want to.
Exactly. And lastly, the style, the trading style, because there are more aggressive trading styles out there, and there are conservative ones that wait for like 2-3 confirmations before you even enter a trade.
Yeah, Sam, there's something else I want. There's something, you see, these triangles, we have names like pennants. If you take us maybe to Euro Swiss, the one that you're looking at, Euro Swiss, and you drew something like a pole. See, that one looks like a pennant, right? It's what you would find in the market, just like a pennant, where you're having a triangle, then something like a flagpole. Okay, that's a pennant. Even on the next example that you had there,
NSD.
A pennant as well. Yeah, look at that.
Yeah. True. Yeah.
All right.
So these are easier to spot because they're very obvious. If you've looked at enough patterns, then you'd easily recognize these ones in the market.
Yeah. It's just practice, and then you train the eye to recognize. By there, I see another triangle here, like that one. Yeah, you can as well indicate it. There's another triangle there.
So you have prices. Just a minute. Like that.
Exactly, that one. And at the top.
And then at the top, we have that.
Another one. And the break to the downside, give all that move downwards. Yeah.
So in this case, this one is sort of neutral. You can't tell if it's bullish or bearish until you have your break.
Yeah, we might, if in another way, if you want to focus more on these setups, sometimes we have symmetrical triangles and all that, but for today, just to check out on what that triangle is. I have my friend, of course, telling me also of pound USD daily, where we have several pound USD. I don't know whether you're able to check out on pound USD.
Let's pull that chart up.
Hey, Edwin is listening to us. We're not here with Edwin today, but helping us a lot. So check out on pound USD on daily. We have a strong triangle happening on a daily.
The daily. Yes, I can see it. That was
all right. Show us.
So
thanks, Edwin, for that, by the way.
So you have this over here. And this was here since morning. I remember we had talked about this, the whole Russia situation in Europe and the gas and the inflation fears and all that.
Yeah.
So this was a really nice pattern.
That's a nice one.
This is a daily. Sorry.
So, it's a daily.
Yeah. Okay. So that's a really nice triangle over there.
Nice one. So I think now you can move on to check out channels on my end.
Yeah.
Okay. So let me share my screen as well, show you a little bit of what I have collected on channels. And here we are looking at pound New Zealand, just like we mentioned, it's just a matter of looking at successive support and resistance levels, and then the structure just comes out quite clear. I hope you're able to see my screen. Okay, awesome.
Yeah,
so yeah, here we had a very strong drop. Okay, here we're talking about a bearish flag, a very strong drop of the price, and then after some time there's some consolidation before another drop, though it wasn't as big, but still an example of a bear flag. So it's where you joining successive support resistance levels, and then yeah, you realize that
So in this case, the fitting of the lines is on the wicks or on the closing prices? Or you've said we just try and fit it. How would you say we fit this?
I think I would say it's a zone, because let me get another line, for example, and I drew it from here and have it that way, right? It's just along the same zone.
Okay.
I also drew it this way, and I'll have something like this. All the same, it might appear like a little bit of a triangle, but look, it's just within the same
exactly
the same zones.
Yeah.
So you're looking at the zones because obviously look at the way break happens, right? So probably you want to look at the zones, not specifically the wicks, but the zone, because you're looking at a significant move to a significant move where the price is moving beyond a level that it was not able to break previously, like here, right?
Okay.
And I think with this one, the confirmation candlestick in this case was this. If I can use something to indicate, we got. Oh, this is so big. Sorry about this. Now it's messing me up. Okay, I wanted to talk about this candlestick here. This strong bearish candle is a confirmation candlestick, right? It's quite clear it's broken beyond this zone, because the two others were like rejection, right?
Yeah, I wonder if the same concept applies. The breakout retest. If it's a strong break, then you don't wait for the retest. If it's a weak break, you wait for the retest. What do you think?
in this case, because of the conversation about the zone, because if I remove this channel, the conversation about the zone, you're talking about an area, and this one might have looked like these two green candles, these two bullish candles could have cited some form of a likely rejection of the downward move and a likely move to the upside. You see that?
Yeah.
So then there's always that likelihood.
That could have been that could have been very tricky.
So the aspect of retest here is a little bit subtle, as much as we want to look at it. But for me,
and then it comes back to the point of, are you aggressive or conservative? Because if you're aggressive, then you'll take the trade anyways. And if you're conservative, then that will have given you a signal to maybe reconsider.
Yeah, but still you cannot take away the aspect of retest, because now that the price went down again aggressively, we can consider this one as some form of a break and retest situation. But previously, before we saw this strong break to the downside, we could have just kept our hands, our fingers crossed up until we find a confirmation. So confirmation is the thing. Yeah.
Okay. Yeah.
Exactly. True. So this is for the bearish flag. Of course, I had other setups in. Sorry, let me move this one. I had other setups that we could look at. They are not specifically flags, but you can look at the channels, and whenever you have the break to the downside, then it's quite some move that you can take. And this is on pound New Zealand 1 hour. If I can add the period separators, I don't know whether we will find when this one happened on 1 hour. Yeah, not quite long, but just like yesterday. It happened yesterday at this point here.
Okay.
See? Yeah. So someone who has been watching this one, waiting keenly for this, might have found this opportunity right at this area. Sorry, and I don't know why this one is messing me up at some point.
Or you can use a triangle.
Oh, okay. Let me use a triangle. This one is messing me up. Sorry about this. Yeah, we're talking about this area. That's why we had the break,
rectangle,
right? And you can see the move down panned out quite well. Actually, it happened yesterday because these period separators. This is for yesterday, right? And now today we're here. Yeah. So if you're not looking for that what we calling it, for that bearish flag, then of course you can look for other channels to follow. So let's look at euro dollar. And with the euro dollar, I have a mix of this is the triangle, right? And the beginning is a triangle, and then right here we have a classic example of a bearish flag. You see there? A strong downward move. Okay. A very strong downward move this way, strong downward move here. And then of course another strong downward move after price breaking below these support levels. This is an awesome one. Okay. It's a great one. All right.
I think that's a very clear example of
quite clear.
Yeah, exactly.
But this one is on 4 hours. By the way, I realized that when these setups happen in higher time frames, they are quite clear because there is less air in the market. There is less what do you call it? There's less what do you call it? The market doesn't have a lot of air.
Noise. Is it noise?
Noise. It's air noise. I don't know. Noise, exactly. That's the one I was looking for.
The reason it works on higher, the reason it's more profound on higher time frames is because everyone else in the lower time frame also happens to be looking at that level in the higher time frame. So the higher you go, the more people are looking at that level. So if you have a pattern forming out in the H4, for example, then you'll also have H1 guys who probably have marked that level. You have M30, M15, M5 traders who are aware of that level. So you get that there are more traders consolidating them higher in the time frames you go.
Exactly. And hey, I have someone on the chat on the YouTube chat is asking me, hey, what time frame are you on? Well, currently I'm looking at 4 hours, but there are others where we've checked out on daily and 1 hour. So 1 hour, 4 hours daily. And by the way, all the examples that you've shown, we've not gone anywhere below 1 hour time frame, right? Some.
Yeah. But it is possible to still spot them on the 1 hour time frame, below the 1 hour time frame.
Yeah, even on lower time frames, but I think they are short-lived, a little bit short-lived, right?
Exactly. Yeah. So they are more stronger or more profound the higher you go. Also, then you still have to find a balance though, because monthly, weekly, then you might trade only once a year. So it's good to have a balance of not going too high and not too low.
Maybe do the approach of what do you call it, top-down analysis, where you can find a very nice setup from higher time frame, then you go to catch your trades and manage them on lower time frames.
Exactly. It's called a rule of 4, I think. So if your entry time frame is on H1, you multiply your time frame by 4. So in this case, your H4 will be your larger time frame for analysis. If it's M15, then H1 is your larger time frame.
Would you want to repeat that? Because by the way, it's a question which comes up. How someone can combine higher time frames, and how can you even try to, what kind of a model can you use? Maybe repeat that. I think it's gonna help us, a lot of us,
because it's called a rule of thumb, something that you just know that works. Because if you want to use, if you're on M15 and you use M30 as your higher time frame, then there's not really much different information you're getting. So ideally, if your time frame is say M5, then you'd want to multiply that by 4. So if you multiply 5 by 4, you get 20, of which now the closest time frame to 20 is M30.
It's 30.
Exactly. So that's now your higher time frame where you do your analysis. And if it's H1, then by 4, you get H4. So now that's what you do. So it's by multiplying by 4, you get into higher time frames just enough to show you the bigger picture, and not too high of a time frame that it almost entirely becomes not useful in your analysis.
Sure, and that's what now avoids the other mistake of this problem where someone overanalyzes. You've analyzed the chart on 1 hour, you've gone to 4 hours, you've gone to daily, and now you're seeing different setups and you don't know where to enter.
Exactly. Okay? Yeah.
Okay, so other setup on pound CAD, and what motivated me to look for this setup is where you have the channel, and in between the channel, you realize that we have the triangles. You see?
Yeah, I think once you get used to spotting the patterns, you see them without even looking too hard.
So like in this case, you see, you
Yeah.
find yourself, you're in a channel, but then in between you can find, because this solves the question of, do I have to wait up until the price hits the top of the channel and bounce? But then you realize that there is some form of a triangle happening inside there.
Exactly. So in this case, you can
Mhm.
use the triangle as your confirmation for a reversal on the top side of the channel.
Exactly. So
Yeah.
you can always confirm. I also saw the examples of where you have a big a big triangle, and inside there you have channels. So it's
okay.
a matter of, if you if you're able to spot
Okay.
them, then it's very easy to use it alongside that something, another
Yeah.
pattern. And on UK oil, we have a very nice triangle which is in play, right?
Yeah. Yeah.
Yeah, but in line, this one also, a trader needs to use you need to be very good in fundamentals. Next on gold.
Exactly.
Now moving on to gold.
We thought gold was going to 2000.
No, but the opposite happened.
Yeah.
But realize that the index, dollar index, is really rising. It's moving
it's
up
very
and up and up. Currently, if I don't know where, we can't look at it right now because we just need to stick to what we're doing. But I think it's really quite high. Okay, really quite high. So
I think there's some questions on the, before you continue, on the chat.
All right. So before I continue, thanks for that. Jacob is asking, I'm new and need help to start trading online. Hey, Jacob, that's awesome. We all start from somewhere. Even for us who are here, sometimes we are blank. Okay.
Yeah,
so you start from somewhere. That's for sure. Takes several years of looking at these things, or even several months. If you give it more time, you understand it even faster. So how do you start? Of course, you're in the right place. And for us, we offer this education to our traders, or the traders who want to learn about these markets. So what you have to do, you just go to FX Pesa platform, register a demo account, because that's, you start by practicing on a demo account, right? Once you practice, train yourself, train your eyes to see these setups that you have here, okay? And then after you build your experience, that's when now you go to also build your skills on live trading, of course, taking a very small risk. So how do you start at this point? Just go to FX Pesa, register an account for you to practice, or maybe you can send start to 40184, and there you will be. Okay, someone will be in touch with you. But because you're here, of course, we will take this conversation to the next level. Yeah. Okay. Another question. Malombe is asking, can I use 1 hour chart for analysis and 5 minutes for trading? Sam,
maybe I can
what's your take on that? Yeah. 1 hour.
So you have, so it is
1 hour
possible
for analysis and 5 minutes.
It is possible, but you have to be careful. You don't want to use a time frame that's too high, that the information you're getting is irrelevant. Because in this case, you might find maybe in the 1 hour you're in an uptrend, and then in the 5 minutes you're in a downtrend. Then it confuses you because the other time frame is too high to make sense when you're trading for 5 minutes. Yeah. So the best thing to do is maybe you try and come back a little bit down to M30. So there you'll be getting enough relevant information when you're doing the M5, trading on your M5. Yeah. So you don't want to go, if, for example, I'm on the M5 and I'm doing daily as my top, it won't make sense because daily is too large. The decisions I'm making on M5 will last maybe 31 hours in terms of trading. Yeah. So you have to find that balance, in which case multiplying by 4 on your current time frame makes a lot of sense.
Yeah, sure. But again, it's not cast on stone that it has to be. You can always, if you have a trading strategy which works on those time frames which are quite far apart, well and good.
Exactly. Yeah.
But that's the most common practice that you find in the market. Yeah. But if it works, well and good. I even have another question here where someone is talking about 2 hours and 15 minutes. I think we have 2 hours. This one is for a trader who is in MT5.
Yeah, MT5 you can change your time frames. You can adjust them.
Okay. And looking at our I think my last example here, I have several others. Here we have a channel. The channel was broken, and boom! Look at that strong downward move.
Yeah, in this case, you didn't need to retest.
There was even no retest. The move was quite strong to the downside.
Yeah, maybe you can show us how you insert the channel objects.
Oh, the channel objects, nice one. So
because some of us use the 2 trend lines instead of just clicking on the channel.
Oh yeah, like if you look at this one, I can move it the way I want, and it just comes automatically. So instead of just using 2 lines where you, like this case where you draw a line this way and draw another one this way, what you want to do is, let me remove this one, and you go to the if you're using MT4 or MT5, you find them here, equidistance channel. For the MT4, you find it there. So just select MT, select the channel, and you'll have it. Or maybe if you go to the insert button, then go to the shapes, channels. Lines or channels. Okay, you find the equidistant. You can find various types of channels, but in this case, we want to use the equidistant channels. Select it, and once you select it, you just start from some point. As you move it along those support levels, you realize it just appears, and you can always adjust the top part, always adjust using those holders which are there, and you'll have a clear.
I think this makes the work way easier than doing 2 trend lines.
Awesome. And the same case for this one, right? Just get the equidistant channels from the MT4. You can start either from the bottom or the top, and you can always adjust them. Even if it appears this way, you can pull the other line to the bottom and try adjust them, right? They can work either way. Okay.
Oh, nice.
Yeah, and in this case, this is now a bearish pennant as well. Sorry, not pennant. Sorry about that. A bearish flag. I can see how, yeah, the price got exhausted around this place, and then there's a break to the downside, and boom, look at that. This is on gold. Okay.
Yes. That's gold.
Yeah, this gold, and the move is still in play. So again, other setups that you can look out for. This is just to give several examples that we can use, and you can always plot and check out for these triangles and channels all along. I think that's the last example I have. No, there's the knock. Still, still having it here, right?
It's been trending higher.
Okay. What? Yeah, it's changed since the break. Now there's a little bit of a pullback to the upside. Okay, for the pawn origin cron. Yeah, and I think with that brings us to almost the end. All right, because I don't see any questions. All right, and someone is saying, Edwin is saying, thank you for learning the equidistant channels. Awesome, we're happy that you are here, guys. Now that we don't see any questions, maybe mention that always feel free to come visit us in our respective offices where we do workshops. Some you know it, right?
Yeah.
Okay, I'm speaking with you from Nakuru, and
it's very cold.
Wow, it's cold. It's raining, huh?
Yep.
Okay, and my colleague Edwin as well in Nairobi. There's another place in Kitengela. Find our able trainer there, and Thika. Okay, and all right. So thank you so much. And we have other sessions before I go again. I want to mention other sessions like tomorrow, a time like now, we'll be here with David, scanning the markets, looking at various setups and structures and the events that have been happening in the session. Of course, to help us get a clear picture of the FX markets, right? And just before we close, I am getting a question here. Must I use a laptop to draw lines, or even phone can do? Even a phone can do. Yeah. Usually in our because in this case we cannot actually we don't like using the phone because it becomes a little bit challenging to share, right? But you come to our workshops and be able to do it like one-on-one, how you can draw it. And
exactly. Yeah. But most of the objects you find on the laptop are there on the phone. So you just need to, although they're more hidden because the laptop has more screen real estate, then you'll have more icons. But you can always find any of these objects on the phone.
Okay.
Yeah.
All right then. So at that point, I think up until next time, we call it a session, right?
Right.
All right then. Bye guys. See you.
Bye guys. Happy trading.
Okay. See you next time. Bye.
Okay.